Great. So I want to welcome everyone that I can tell by the list and the number of people that the topics for today from our panel is going to be really valuable. I appreciate so much having trusted professionals that I can call on. We're going to go through a few different people, but just by introduction today, Mark Murray, attorney with Murray and Killow in Texas, Houston, is with us. Mark, thank you so much for joining us. Mark's going to talk about contracts and few other little items that'll affect your business, force majeure and those type of things. And then Ryan Moorhead with the Fitzpatrick Group is going to talk about some opportunities right now. And we're grateful to have him. George Montes was sort of a late addition. I appreciate George being on. George is with Cypress Brook Company, which is a commercial real estate. And he's going to talk a little bit about, way you might communicate with your landlord and if there's any room for movement there. And then Fred Allen is with All American Public Adjusters, and all he does is deal in catastrophes. So he should be able to help us here. So what I'd like to do is I'm going to start with Mark in case you've got to leave. Mark's got a closing today, and he was good enough to join us. Mark, if you just talk a few minutes about, what businesses should do with contracts and advantages you might be able to give any businesses right now during this time. I appreciate you being here. Mark Murray.
Murrah, I'll be here for the entire time. So I've rescheduled my closing to Monday.
Great, thank you, Mark.
Sure. So what we're seeing, and I was on a call all morning with a business owner this morning, is the immediate triage issues of keeping your business running, meaning, looking at everything that you do to ascertain how to stay in business. So you look at your contracts to see if there's ways to delay payments that you may owe or restructure those contracts through a force majeure provision or something else that we can talk about later. Asset protection planning to determine, how to shield assets or structure your company if you need to perhaps restructure or file bankruptcy or something like that. Looking at your insurance to see if you have business interruption insurance or some other type of policy that might cover you during this downturn, as well as the financial implications of the new stimulus that's come out and how you find the money to keep going. So what we're really seeing is, how do I stay in business today? And then how do I stay in business 2 months from now, 3 months from now?
Awesome. Thank you. George, you want to talk a few minutes about commercial real estate? People that have landlords.
Sure. I talk to clients on a daily basis, specifically, what's happening out there with their businesses, with them individually, and how it's, their businesses are being affected. Right now, it's a little too soon to find out how landlords are responding. I've got a little bit of feedback with a client who's in the exhibit industry, and of course, all, conventions have been shut down worldwide through June or whatever it happens to be, maybe longer. So they have no revenue coming in, and that was pretty early for them. So they've approached their landlord, and the landlord is gracious enough to work with them a little bit. We approached them by trying to offer them some value of extending their lease for a couple of years in order to get a few months of rent forgiveness, still paying operating expenses, but doing whatever we could. Now, this particular landlord is probably one of the largest industrial landlords in the world. They're very well capitalized, and for a good tenant, they're willing to work with them without extending their lease at this time. We still have 2 years left of term. But there's going to be a lot of landlords out there that they're just mom and pop shops. They still have mortgages on their building, and they're going to be in the same position that, their tenants are going to be in. So I think when it comes to trying to ask for forgiveness from your landlord, it's going to be on a case-by-case basis. If you've been a good tenant, they may be willing to work with you, but at the same time, we have to hope that their banks are also willing to work with them. This is likely going to be a worse situation than, say, 2015 for the office market specifically, because back then I think it was November of 2014 when OPEC decided not to defend the $80 price per barrel. WTI dropped down to the low 20s. And all of a sudden, we saw a lot of massive layoffs in the oil and gas related businesses, which created a big glut of sublease space available on the market. Now, I think today I saw WTI down to just over $21 per barrel, with the price war that we have with the Saudis and Russia. But on top of that, we've got the coronavirus, which is negatively impacting global demand for oil and shutting down a lot of other industries. So I think we're going to see something very, very similar across all asset sectors, not just office, although office is going to be hit pretty hard, I believe. And we're just coming back to kind of recovering in the office market. But I think you're going to see retail and industrial as well, to take a hit. Now, the positive with all of this is that it's really going to be a tenants market. So what that means is that landlords are going to be competing aggressively for lease deals. They're going to be competing very aggressively for tenants. So there will be opportunities to negotiate probably better rates with better tenant improvement allowances, better lease terms. The lease language, as I'm sure Mark can attest, there's it's more than just rate. It's about what does that lease tell you. I always say that in any contract, 10% of that contract is how you get married, and 90% is how you're going to get divorced. And it's within that 90% where there's a lot of perils for both parties potentially. And I think you're going to see the landlords become a little bit more flexible in some of that lease language.
So if I could, George, let me ask two questions. Just talk to some of our people participating today. If I've got a lease and I see that I might be in trouble, what would be the strategy? Would it be to go to them immediately and communicate that, hey, there may be a problem here? And would the strategy be to ask for like a few months of relief to be added on to the end of the contract, or just, hey, I need to forego this payment if you want to keep me as a client? What would you suggest? And Mark, please weigh in as well.
Yeah, and again, I think that's really on a case-by-case basis, depending upon what the outlook of that individual business might be, right? So in the short term, like for example, the exhibit client that I was talking about, in the short term, they're not going to have any revenue coming in, and just like a lot of the hotels out there, a lot of their staff, there's just no use for that staff because there's simply no work at all. But that's kind of a short-term time horizon. Otherwise, this particular company is very well capitalized. So in the long term, they feel very strong about their position. It's just trying to navigate in the short-term time of uncertainty. So in that situation, like we led with, well, give us a few months of relief and we'll tack on 2 more years to our lease. But not every tenant is in that position. Some tenants are simply trying to survive, and they can't see down, the long term, because they're just trying to figure out if they can survive in the short term. At that point, it's when you look at your lease, talk to your broker, talk to your attorney like Mark, and see what does it state within that lease. Do we have any wiggle room? Do we have a force majeure clause in our contract that we can exercise? If not, what are our other options? We can talk to our landlords. Like I said, if it's with a large, landlord that's well capitalized, then, they may be able to work with them. If it's a mom and pop landlord that is struggling themselves, they may be less, interested in trying to work with them unless they get help from their banker. And another option too is subleasing some of your space if that's possible and offsetting some of your cost.
Excellent.
So I think those are 3 immediate things that somebody can do.
Good. I think the key point you mentioned, I wanted Mark to jump in here next. I think the key point, is to communicate, get out in front of it as best you can so they know what to expect and to hear from you. Mark, would you like to add to that, and especially as it relates to in a standard lease with the force majeure come into play here?
Yes. So as I put in the group chat, I think George raised to me the most crucial point in this whole situation, which is communication, which is what I was talking to a client with this morning about working on a workout with his lenders Same thing applies with landlords or really anybody else you're dealing with. If you don't communicate with them and stay in communication with them, just human nature is to go to the immediate worst case scenario. And so I think a team approach with your broker, who's probably been their main point of contact. If you immediately go to lawyers, that can get adversarial. So you certainly want the lawyer on the team, but I would lead with the broker to lead the communication. And then, in the background, we could be looking at the contract. Do you have a force majeure provision? Is it applicable in this situation for pandemic, various government, which is why these disaster declarations and things you start to see at the state level, the county level, national level mean so much. It's so money can flow and certain legal standards are met. You might look at your casualty provision. Typically, you think of a casualty in a lease being a fire or a hurricane or something like that, but how it's defined, could a casualty event be in play? And there, you might have some kind of break on rent from that. The tactic I would take with any landlord, if you're trying to stay in business, is there some way we can restructure the lease so we both make out? Can you extend the term, get a couple of months of free rent, put it on the back end and redo the lease? Anything that helps hopefully push this kick the can down the road for a couple of months to see if everything starts to get back to more normalcy. Although I agree with George with West Texas Intermediate being at whatever it is this morning, 22. Once we get past COVID, we're still facing in Houston and in Texas an oil collapse. So, yeah. I mean, the key takeaway for me is communication. Because I see, in my career, I've just seen so many times people they get hit with problems, they don't know where to start, they bury their head in the sand, and then it plays out with lawyers and courts and bankruptcy trustees. You're better off if you can get your team together to start talking to people today.
Yeah, great point. And I just see from John Greer in Alameda, California, that the House has approved the stimulus bill. We're going to talk about it in a minute. It's on the way to the president for a signature. Thank you, Jonathan. Okay, great. If anybody have any other questions about real estate, just at this point, not that you can't have them later, but if you do, please post them. So I think to summarize that is to communicate, get out in front of it. I would say that most significant landlords are going to probably be willing to work with you to, worst case, add time to the end of your lease if it's handled properly. I'm not saying it's always going to happen, but the main mistake I think people can make is by not asking. I mean, all you're going to get is a no. And so I think you should be ready to be prepared to ask. Yeah, please.
You had a question on how does this protect renters and apartments?
Yes.
In Texas, and I'm assuming nationally, evictions have been paused and foreclosures have been paused. So at the state level, we could send out, the guidance on that from the state that we've gotten from the state bar and the courts. But if your residential tenancies are protected right now, but commercial evictions are not. So a landlord could still lock you out. That's why communication is so important. When people think mostly about a commercial eviction, really what you should worry about is a lockout for non-payment of rent, where the commercial landlord can post a notice that says you haven't paid the rent. To get access to the premises again, you've got to pay the rent. We'll give you keys back or give you access back, which is a commercial landlord's greatest friend, being able to keep you out of the space, and a commercial tenant's worst nightmare, not being able to have access to their facilities. So that's an important distinction right now, but we could send things if anybody wants. We're happy to send out what the current guidance is on evictions or stuff like that.
Awesome. One comment to make sure you get things in writing from the lease. I think that's a good idea. Can you touch on the concept of impossibility to perform regarding leases?
Well, I mean, realistically, in Texas, rent is an independent covenant. So every lease you're going to have in Texas is going to say it as well, but it's also case law that rent is an independent covenant unless there's a contractual provision that stops you from that, mitigates or changes how you handle the payment of rent. So just because something is impossible to perform does not mean typically in Texas that it obviates or stops the obligation you have to pay rent. So we get that a lot, or in normal situations, people are like, well, the landlord hasn't made a repair or something else hasn't been done. I want to offset and not pay my rent. You can't do that in Texas generally. And as on this panel, just to get it on record, everything I say is subject to your exact fact pattern situation. This is not independent legal advice. Consult your attorney. That's all I'll do on that. Thanks.
Awesome. Very good. Okay, well, if there aren't any more questions just right now, we're going to move on. Fred, I'd like to get Fred Allen on if we can. Fred, again, is with All American Public Adjusters, and his entire life is spent in this space. So Daniela, if you can make Fred available to us, that'd be awesome.
Hi, Scott. I'm here.
Thank you, Fred. Go ahead.
I am a senior public insurance adjuster. I work for All American Public Adjusters, and we work in disasters all the time. I carry gear with me in my vehicle so that I can go into fires, floods, mold-infested properties, and so forth. And I'm a field adjuster, so I work very closely with the construction companies, the mitigation companies, and those kind of professionals. I also have an office staff that works behind us to help evaluate policies for coverage. A lot of people in the commercial venue, which is where we're focusing right now, have business interruption coverage in their policies, and some actually have coverage for cleanup. One of the big things that I find that complicates issues on recovery of a space is improperly done mitigation. I work very closely with the big Serve Pros and some of those other ones like that at a national level. We go into, we've been in Panama City, Puerto Rico, most of the states in the country, and work very closely with these people sometimes as estimators for the damages, and then sometimes as project leads, so that we can make sure things are done correctly and signed off in a proper manner. But that, if I have any advice, it's always best to consult with the professionals to take a look at it and give you good advice as to where to go and how to recover from it correctly. What's going to be challenging about this one, when I go into a hurricane or a tornado area, it's pretty obvious, where the damages are. This is more subtle. This is more like a very bad mold infestation. And that's how we approach it as far as cleaning it up. It has to be done, we call it Cat 3 cleanup. It has to be properly vacuumed with the correct type of gear. Plus it has to be wiped down with the right type of thing. And all the people that do this kind of thing for a living go in with their hazmat materials and their hazmat gear, and they do it professionally, and so that you can move back into your site and feel that you're properly taken care of, and that your customers and your employees will be safe to come back in.
Awesome. Good stuff. Any questions there? I would tell you that my 3 small children, 10, 8, and 5, think this is worse than any mold or anything, is they've been without Netflix for 48 hours. So that's like worse than the coronavirus, I can tell you. They're dying on the vine. Let's move to Ryan Moorhead with the Fitzpatrick Group. And maybe, Ryan, you can lift us up a little bit, talk about some opportunities here for us.
Hey, Scott, how are you?
Good, Ryan. Good to see you. Thank you for joining us.
Good. Thank you for having me. Yeah, so I work a lot in the financial space, not in a typical financial advisor sense, but I would say, look, a couple of things in terms of financial planning or things we should be thinking about as business owners and individuals, frankly. Number one is this is not a time for panic. I know the financial markets have been kind of crazy, coronavirus, oil and gas, we've kind of beat that to death a little bit, but don't panic. But I will say, while we should not panic, we also should be vigilant. And for some of us, this needs to serve as kind of a wake-up call. And similar to what Mark and them said, I'm not here to give anybody individual advice. You need to speak with me on a personal basis or with your financial professional to get advice that pertains to you, because everybody's situation is different. But wake-up call, right? I consider some things what I call your defensive planning. Some things you should be thinking about is, hey, things do happen. Viruses, natural disasters, whatever. How are we doing on just the basic insurance side of our world? Do we have enough life insurance in place, be it term insurance or whatever? Do we have income replacement in place? You know, and if we don't, now is probably the time to be seriously thinking about some of those things so that next time we can be better prepared. Also, if you do have these type of things in place, even your property and casualty insurance, your car insurance, your business insurance, now is not the time to be cutting back on that as a way of cutting expenses, right? God forbid if you cut back on the limits of your car insurance and you get in a car accident while things are financially kind of unstable, that just magnifies the problem. So really be conscious of that. So again, don't panic. Use this as a wake-up call. If you don't have insurances and things in place that you've been meaning to put in place, I'm happy to be as a resource. And if you do have them in place, now's not the time to be cutting back. In terms of what I would call offensive strategies, planning, if you will, one of the things I'm a big believer in is, do you have access to capital when opportunities come up, right? For a lot of us, business is interrupted, business is a little bit slow, but now may be the opportunity for some of us to invest in a new business, open a new business, reinvest in our current business. Frankly, an opportunity could be, if you're a stock market person, take advantage of a depressed stock market. The problem is most of us traditionally can't do a lot of those things because we don't have access to capital. Either we don't have cash or we don't have a way to borrow money or whatever. So in anybody's financial strategies going forward, again, use this as a wake-up call to say, look, what am I doing to make sure I have access to capital? And that goes beyond just having money sitting at Capital One or Chase, right? We know savings accounts aren't paying much interest right now, so it goes beyond that. There's some really cool things you can do out there that are very efficient, that can help your money grow and also leave it liquid. I'm kind of practicing that a little bit in my world right now. I am not a big stock market guy day to day, but I'm also not an idiot, right? And so I've taken out some cash, some cash positions that I have, and have purchased some stock in the past couple of days. So just some ideas. Do you have access to capital when opportunities come up? You know, and make sure as you're building wealth and kind of planning for the future, understand a couple of things, right? We need to really understand our tax position. And I'm not a CPA, but I don't mind giving some generic tax advice here. Think about, you know, when you're looking to save money in terms of taxes, I presume most of us are planning to be successful at our business. With that being said, you're going to start climbing the tax brackets. I'm also a big believer that the IRS is also going to increase taxes in the future. Taxes are basically on sale. The highest tax bracket in America is 37%. Over the course of income tax history since 1913, the highest bracket has been 60 on average, 60. So we're 23% on below average right now. We're $24 trillion in debt, and we're about to add 2 more trillion to that here in any minute. So think about things when you're planning for the future. Hey, if you're planning to make money on your own and you, or with me, you believe taxes are going to be higher, then why on earth, as a savings opportunity, would you use traditional financial thinking in things like SEP IRAs or traditional IRAs where you're electing not to pay taxes today in exchange for paying them in the future? Does that make any sense? Mathematically, it does not, right? So be conscious of those things. And the last thing, and then I'll open up for questions, is understand when you are building wealth, either for the short run or the long run, understand who your enemies are, right? Your enemies in wealth building are threefold. Number one, stock market volatility. Again, I'm not suggesting you should never have money in the stock market, because certainly there are opportunities, but day-to-day market volatility can erode our portfolios. Tax risk I talked about. We're going to be in a higher tax bracket down the road. Understand how that math works when you're in your retirement years. And lastly is the advisor fees. There's advisors out there charging clients 1% and 2% of their account balance every single year for not doing too much. I've got a lot of friends who are in that business and doing that. And I spoke with one of them yesterday, and I said, man, how's it going with your clients? He says, well, you know, it's not going too bad, but all I can offer them is, hey, just stay the course. I don't really have a solution for them. And people are paying for that. And I'm like, man, when people need you, right, you don't have a solution for them. I've done in my practice, a lot of my clients have been comforted recently. I can reach out and make calls and say, hey, remember those growth accounts we have going for you? Or remember, they don't have anything to do with the stock market, so you haven't lost $1. And by the way, if you want to buy some stock, you've got access to a bunch of that money. So just let me know if you want to take advantage of opportunities. Are we thinking like that, or are we just succumbing to traditional financial thinking that typically benefits the government, the IRS, and the financial institutions? So I got a little long-winded. I'd talk a little more things than I wanted to, but I'm happy to help anybody, individually, personally, whatever. Feel free to reach out. Any questions for me?
Awesome. Thank you, Ryan. Any questions for Ryan? So I'm looking at some of the comments on the side, and I really encourage y'all to post those on your group sites. We have so much talent in this organization that really this daily dose has been, the hardest part of the daily dose is trying to drill down on all the experts that can help us, because we have so many, and we're going to open up for a few other people in just a minute. But I know a lot of you wanted to talk about some of the government programs that are out there. So I am going to start with that and then call on some help here in a second. And I want to break it out into two sort of areas. But one of them, I keep wanting to reinforce this. Before you start approaching these programs that the government's offering, whether it be the CARES Act or the Economic Injury Disaster Loan, you really got to slow down and strategize, because everything I'm hearing right now is I keep hearing the word discouraging. I think that means they're not going to allow you to do both. Now, we may find out that that's different, but as of this moment, there are two different programs that have been made available. So the first thing I want to state is every state in the union is covered under this, not every county. Can you imagine there may be a county still not covered? Don't give up on that. If you happen to be in one of those counties, pick up the phone and call your representatives and raise holy hell, because it's just crazy. This is shut down everywhere. So as long as your county and your state is affected, the government has put up billions of dollars for this economic injury disaster loan. I want to talk about it first. It basically is a SBA loan. And I know we have people on the phone here, on the call here today. I'll let Lisa talk in just a minute, but it's a disaster loan, about 3.75% interest, typically paid off over 30 years. And you can get significant amounts of money. It's going to take a good 60 to 90 days. I think that's optimistic, kind of the overload that the SBA is going to have. So you really need to think through this. If you need money today, we're going to talk about the CARES Act in 1 minute. But basically, the SBA, you go on their website. We're going to post that website on all the network and action sites shortly, so you'll have access to it. But basically, it's I've got it here. Sorry. If you Google economic injury disaster loan, you click on it, and that's the SBA site, and you can go to their application. A few little tips, and I mentioned this over the last couple of days, and sorry if I'm being redundant, but I think we have a lot more people on the call today. You know, if it's over $25,000, it's going to need to be collateralized. If it's under $25,000, it doesn't. You're going to need to live in the county where the disaster occurred. You're going to need to have an existing business. You'll show your credit worthiness and your ability to repay this loan. But they are great loans. I often tell the story for those of you in Texas. There's a water park in Central Texas called Schlitterbahn. It's one of the biggest ones in the world. And all they did is wait every 8 or 10 years for the Comal River to flood. And that thing would fill up with water and wipe them out. They'd be down during the off season. They'd get a couple of $1 million with SBA loans, and they'd build that thing bigger than ever. And it's sort of a joke there that whole water park has grown on the back of SBA disaster loans. So they're available to you. I think the mistake people make is they don't think they can earn one, or they don't think they can qualify for one. So it's pretty basic. It's a lot of paperwork, and I'll at least speak to that in 1 minute. But that is a loan that if you can ride out the next 60 or 90 days, you can get that loan. You can get a lot more money, and it is going to take some time to get it. Then that's sort of the basis of that. The other loan, which it looks like is on its way to the president for signing, is the CARES Act. And what you've heard about that is the money being sent to you if you qualify for every family, $500 a kid and up to $2,400 a couple. And there's some variables based on how much money you've made over the last year. They're looking at 2018 taxes. If you haven't filled your 2019 taxes, I will say this: if you haven't filed your taxes in the last 2 years, you need to get on there and fill out the form on the IRS to make sure that you qualify for that. So that check's going to be coming to you. But another part of the CARES Act was the money set up for businesses that are willing to hang on to their employees. And as I understand it, what's in there is 2.5 times your current payroll. So some of you are on your company's payroll, and everything I've read and been able to investigate, you're included in that. So if you have a $10,000 payroll, you're going to be able to go down to your bank, is the way I'm understanding that it's set up. And in short order, you're going to be able to provide, your payroll proof, year-end financials. You're showing your corporation papers. put in that application to the bank, and within 7 to 9 days, you should have that money back in your account. Now, it's not a repayment if you keep those employees. How they're going to prove that, I have no idea. But if you're willing to keep your employees on your payroll, that is a short term answer to some cash flow. But be sure and be smart about it. Strategize, because as I understand it, at least as of this recording, that you're not going to be able to get that CARES Act as well as an SBA loan later. Maybe that'll change, but as of right now, if we can, Daniela, give Lisa a little bit of minutes to talk. I know Lisa Martin is one of the members of our Network and Action Group, and her company helps people with SBA loans. So Lisa, can you just take a minute or two and fill in on what I left out? Thank you.
Hi, good morning, or good afternoon. Sorry, I'm a little bit behind the times. A couple of things. People are already receiving money from the SBA loans because they've already started releasing money. So the quicker you get your applications in, the quicker you're going to be in the queue, get it reviewed, and get it processed and start getting some relief money. I'm going to call on Joanne Miller, who's on this with me, and she and I have partnered together. She has been an SBA loan expert for, what, 15 years, Joanne? So she knows the ins and the outs of the SBA and what they're looking for. I can tell you the most important thing is a lot of people put their financials off thinking, well, my taxes aren't due, I'll do my financials in a minute. But the SBA is not only requiring your taxes and a copy of your returns, but they're requiring your projected 2020 numbers. So if you don't know where you are in 2019, it's going to be hard to come up with 2020 numbers. And that's one of the things that Joanne and I are partnering together, where I'm helping people finish their 2019 financials, do the 2020 projection, and Joanne is doing the loan application through SBA for us. They've got some very strict rules that we have to follow, and I'll let Joanne talk on those. But your financials have never been more important, ever. People always go, you know, I don't really need a bookkeeper. But if you don't know where you are with your money, and this has always been the thing, if you don't know where you are, you don't know where you're going. But right now, if you're wanting to apply for any financial aid, you need good financials in place. So Joanne, I'll let you take it from there.
Thanks,
Thank
Lisa. Thanks for asking me to join in on this conversation. Very important. I'm a 30-year banker, commercial banker, and now I work for the capital markets. But Lisa and I have partnered to assist businesses in obtaining this SBA under the E Ideal. It is important to know what the rules are. The E Ideal is meant for companies with employees of 500 or less. That's going to apply to most small businesses. They're very strict about how you're going to use the proceeds. As Lisa mentioned, good financial information reporting is critical because that's how they determine how much you get. All the rules are not defined yet, but from what the talking points that have been issued thus far indicate that the proceeds are going to be used for your fixed costs, which is where your projections come in. They want to know what your expenses moving forward are with or without revenue coming in due to this disaster. Your rent's going to be built in, your payroll. And so once again, as Scott mentioned, keeping employees in place are very important, and the government's going to help you through this EIDL in funding the salaries. Your fixed debts. So they're looking at any business debts that you have outstanding so that you can keep those vendors current, those payments current. So your accounts payable. Those are the important things. The misnomer are people thinking they're going to get working capital, blanket working capital. No, there are other products out there under the 7A program, or they're asking you to tap your regular bank relationships for that working capital needed. This is purely to keep the expenses paid within your business, salaries paid to keep your business doors open. You have alternatives. The first thing, coming back from, being a 30-year banker, the first advice I would give to every business owner, if you have a line of credit in place, tap it, use it. Much we saw in prior years, banks are going to be evaluating the lines of credit immediately and determining which customers are using them and which aren't. And I can foresee that they're going to be eliminating lines of credit, particularly for those businesses or individuals that are not using or accessing their lines of credit or have not accessed maybe in the last 6 months or a year. So also the SBA is going to use that information in determining the amount of money you qualify for, basically your access to capital. They call it the credit elsewhere rule. So there is a credit elsewhere rule that if you have the ability to borrow through your traditional banks, if you have available lines of credit that will fund these purposes, then they're not going to give you those monies under the E Ideal. So once again, good financial reporting is essential in this process. Now, E Ideal currently is available up to $2,000 per business owner. $2 million, $2 million available per business owner. Now, if you have an existing business loan, you have to back out that fund. $2 million is per business, not just for the E Ideal. So if you currently have an SBA loan 7A 504, back that debt out and you'll know your availability going forward. Again, that's not necessarily the dollar amount you're going to get. They're going to review your needs, your financial information, whether you have credit elsewhere, then they're going to determine that amount is. They have quoted the rates would be 3.75, which is a very attractive rate. They are offering long-term repayments up to 30 years, but not necessarily years. And I'm going to suggest you're probably going to see something like a 10-year on most of this type of money. Now, the nice thing about it is they are they're offering up to a 12-month payment deferral on these new loans. So even though today it will be accruing interest, your first principal and interest payment will not be charged up to 12 months. They want you to keep your payments today current, but they don't want to overwhelm you by another payment down there. But realize these are per diem based loans. You are going to be charged the interest on a per diem basis, but they're not going to call for payments for up to 12 months, depending on how long this plays out. The term, we go back to that term. Their term is based on your ability to repay, and that's why I say they're not going to give everyone 30 years. They're going to look at your credit history. They're going to look for forma. They're going to look at your interim. They're going to want to look at your first quarter interim statements, and they're going to determine how quickly you can get this and what you can afford moving forward based on your historical numbers. That goes back to what Lisa was saying. Financials are going to be so important to have good financial reporting going into this. They're still advising us, though they are, they're moving as quick as possible. They are advising it can take up to 30 days to get these monies to the businesses out there. I'm asking you to tap into your existing bank reaches, your lines of credit, additional commercial lines of credit at the bank, not charging up your credit cards. That's not what I'm encouraging anyone to do. I'm getting word from banks. Some banks are already putting a moratorium on new business lending for the next 30 days. This is usually what happens in these cases. As a 30-year banker, I knew this was coming. They're already issuing it. So you may go to your commercial bank and not be able to get any type of financing through the commercial bank. That is where my position at Ringstar Capital, I'm considered an alternative lender. I have many of the same products as your traditional banks, including SBA loans. And then I have non-traditional loan products that can fund your businesses immediately. A lot of those are leveraged with collateral. Credit score is going to play into your personal credit scores are going to in your ability and the risk on getting them. But the biggest message I want to send out to every business owner is access your capital now. Don't wait for this to play off. Ryan said it too. Go ahead, and the SBA is even saying the talking points are apply early. Apply early, get your name in the queue. Don't wait until that money is spent on someone else. Numbers together, get it in the queue. If you need something quicker than 30 days, start talking to us and let us know. Let us help you early. Some of the capital market lenders are shutting down. Most of those, though, I see are unsecured lenders and the more riskier credit lenders. So we still have opportunities to do capital market loans and do short-term cash loans, what we call bridge loans, to help bridge the gap today until you get it by the SBA.
Let me break in, Joanne, just for a second. What's important for everybody to understand as well is that SBA will back into what you can afford to pay back. So although $2 million is available, you might not qualify for $2 million. And what you're doing and what I'm doing to help people is understand what they can apply for so that they're not automatically rejected, right? We're wanting to start a conversation with the SBA. We're not looking for an automatic rejection. So one of the things with looking at the financials and your expertise is we're backing into those numbers, and we can say, you don't qualify for $2 million, but you can get 100,000, and let's just do that to keep your doors open through this crisis. Is that correct?
Good point.
Correct. That's a very correct statement. Now, the important things to know when you go to SBA loans, you can have any current defaults on any government guaranteed loan. That includes FHA, VA loans. For homesteads, includes student loans. So ask you to disclose that. They're going to ask you if you have any current felonies out there. That's an important question. They do full background searches on SBAs. That includes your drunk driving, your
Joanne, can you hear me, Joanne?
Ask sensitive questions. Yes, sir.
Okay, I'm gonna cut this off only because
Okay.
we're losing you often. But let me see if I can summarize. It was excellent information. Number one, get in line quickly with the SBA. 2, make sure you know what you're able to apply for and pay back. 3, I'm so grateful it's $2 million, not 2,000. My wife wouldn't get through a shoe store on 2,000. So very grateful that it's $2 million limit, that it's available to anyone that's got a business, and the payment terms don't have to go all the way to 30 years. So there's also, I thought was great advice, just for those of you who couldn't hear, great advice that if you have a line of credit from your bank, draw down on it because you might likely lose it. And that there are second tier vendors that can lend money to people outside of banks, and those are available to you. So for everyone on the call, we're going to make the information available. Joanne and Lisa's information, Mark's, everybody's on this call.
And Scott, what we can do is send you all the forms that they need to fill out. Perfect. To apply for the SBA thing, and then send it to Joanne or myself, and we can tell you kind of how to back into that number to get the process started. But
Perfect.
there's probably what, 6 or 7 documents, Joanne, that they need to fill out?
Roughly, depending on the, I saw a message pop up that sole proprietorships are included in this disaster loan process. You don't necessarily have to be just a corporation.
So Tom Reed asked a great question, and I want to have anybody weigh in here, but I'll weigh in as well. Why would we want to tap into some credit line if interest rates on those lines are higher than you want to borrow? I think the short-term answer would be for me that I want to make sure that I have capital available. If I need it, I can always prepay the bank back and not suffer any great penalty for that interest while I'm waiting on my SBA loan. But Lisa, do you have any comment on that, or?
No, I would absolutely take it and put it into the savings account, even if you don't need it, because the banks are going to stop issuing them. They're going to take back their lines of credit because now they're going to be in a risk position themselves. Perfect. So if you have it, take it, put it in a savings account. You can pay it back until you get the SBA loan. Once you get the SBA loan, then you have that in your back pocket. But you don't want to risk losing a line of credit that you already have established because the banks are going to run scared. Great. Okay, Ms. Armstrong, we'll get you the information for everyone on the call today.
And Charles Walters makes a good point on all of this. This is just information we're putting out to try to be helpful. Mark will be the first one to tell you he's not here to represent you legally. All of the panel.
And I'm not here as the CPA. So
yeah, this is just to help.
And this is
Charles,
coconut water. I just feel better in a wine glass.
Charles, definitely consult with your attorney before you do anything. Somebody asked, are both options possible grants in the future? No doubt. I mean, who knows? They're talking already about another stimulus plan coming behind it, so we'll try to keep you abreast of that. Before we jump off of here, I wanted to invite Bridget Romo to jump on. If you could, Daniela, pass the unmute to Bridget. Bridget owns a company called Socially Branded Media, and it's interesting that right now, I mean, the internet usage has gone through the roof. And so I want Bridget just to talk to all the business owners just for a few minutes about maybe any opportunities on the internet. I can tell you from a perspective that we are gearing up. There's 40,000 people have been laid off in Houston, and there's going to be, obviously, we're gearing up to market heavily for franchise owners using social media when the time comes in a couple weeks. I think it'd be a little insensitive now. But Bridget, if you could just talk a few minutes about opportunities on the internet, social media. Sorry.
Yeah, sure. And I'm not going to put my window on or my video on because I didn't anticipate talking. So like a lot of you, I'm in my house, in my comfy clothes, but I just posted a video to my LinkedIn and Facebook account, the social media right now. And if you're like a lot of us, we're spending a significant more time on social media, whether that be Facebook, Instagram. I've even, downloaded TikTok. And been watching a lot of more content just because our time is being restricted to go out, go to the movies, go out to eat, do a lot of things that we did. So as a business owner, it's a very good time to be putting out content that is relevant to your business. But I will say this, you want to be somewhat careful about how much you're selling versus how much you are just being top of mind. So I had a few clients this week actually message me, be like, we don't want to push any of our products. We don't want to push our services. Let's just be supportive to the community. Let's be encouraging and positive. So you may want to take that approach depending on what your business is. If you are offering something that's really going to help people during this time, then obviously you want to push that content. But think of it as positioning yourself to be top of mind so that, when people are out and able to spend more money or they're back out doing business again, a lot of people are being cautious right now, that you are on top of mind. And also I would encourage you to be creative. Find ways that you can kind of shift either your services to a more online based business. But again, I would encourage you to continue putting out content right now because it is being absorbed and we are seeing higher engagement across all platforms. So content. If you have never posted as a person behind your business, I know probably everybody on this call has received personal emails from CEOs from all these big companies kind of coming out from behind a brand. So be a person behind your company. Don't just be super corporate. But yeah, I would just say be creative, push out your content, do videos, and stay top of mind.
Awesome. Thank you so much. I totally agree. I think you have to be very sensitive and very empathetic. I know that when I'm seeing companies hit me with something right now that they've probably prepaid for and pushed out months ago, my immediate reaction is how insensitive. So definitely be sensitive, be empathetic, and and be there to help. Hey, listen, I appreciate all of you taking time out. I know how many different webinars you're being invited to today. I want to say one last thing. This stimulus program is going to be awesome. It's going to put money back in the economy. It's going to help tremendously, but nothing's going to help like us doing something kind for our neighbor. So look in your pantry. If you got some extra food, feed somebody elderly down the street, feed the homeless, find something you can do in the next 24 hours to touch somebody's life. This 130 or so people on this call today can make a difference, and that's how we're going to get out of this. So thank you all very much for joining. We'll get the information out on the Network in Action sites with everyone's contact info. Thank you to the whole panel. Y'all were awesome. I appreciate to everyone who jumped in and to all of you joined. Have a great weekend and stay safe. Love y'all.